Hey everybody, what's going on? It is James here, and I wanted to sit down this morning, or I guess it's this afternoon, it's almost 2 o'clock, and knock out a video giving my thoughts on Bitcoin and the market. So obviously yesterday was for a lot of people a bad day. For me, I couldn't really care less because I don't have a lot of money in cryptocurrency. But it was obviously a horrific crash. I read reports that $19 billion were liquidated. Apparently it was 10 times the size of the COVID liquidations. So this is a massive event in cryptocurrency. But here's my thing about all of this. I did a video last week. It did not get very many views. You know, I don't know why that is. Videos get 100% thumbs up most of the time, but YouTube just hates me. They shadow ban me, and I guess they're never going to let me out of that box because of my opinions on COVID a few years ago, but whatever. In that video, I talked about wick off, and I talked about how it looked like we were in distribution. And the thing is what happened yesterday just confirmed what I was saying. We had moved sideways throughout this range, and this looked like an up thrust. I don't know if I went in this exact pattern. I think I did in the last video, but I also edited that video, so I might have cut the specific part out. So this isn't, about patting myself in the back. It's just an explanation. So this looked like what I would call an up thrust after distribution. All right. And it's basically a bull trap where it's trying to get retail to long an asset while institutional money or bigger players are selling the asset. And I'm pretty sure, I'm not 100% sure, but I'm pretty sure I posted about this in Discord as well, showing that this was at a very, very touchy spot. And what happened was the supply simply overwhelmed the demand. Now, I know some of you are going to say, yeah, but it's because of Trump and the tariffs. I'm not saying that it's not related. Like when markets shift, there's typically an underlying catalyst. But what happens in markets is you have to think about it like a room filling with gas, right? By itself, the gas will not explode. It'll just fill up the room. But eventually, if a spark, is ignited, there's going to be a massive explosion. And when the market is trying to distribute and it's already weak, there's a catalyst. So for example, the catalyst for that drop to, 4K in 2020 was COVID. The catalyst for the washout at the end of the bear market in 2022 was FTX collapsing. The catalyst for the bear market kicking off in 2017 in Bitcoin was actually CME launching, right? They launched the Bitcoin futures. And so all of a sudden, a lot of people who had never traded Bitcoin and didn't like Bitcoin had a way to short Bitcoin. And also a lot of the run up that year was, built on the hype of buy the rumor, sell the news with CME. So the Trump tariffs were just the spark that ignited the room that had already filled with gas, and we dumped back down. But there's some interesting things happen that you do want to pay attention to. This is a range, okay? Like I can take this box and just copy and paste another box in here, and essentially this is the bottom of the same range, okay? And if you look, it actually stopped right at the bottom of the range and also retested the 200-day moving average. That's what this blue line is a 200-day simple moving average. I'm not saying this is bullish and Bitcoin's going to go up to 200,000 from here. That I don't know. But what I am saying is a lot of times in ranges, they're not as clean as just down, down, down or up, up, up. If this is truly distribution and my theory ends up being, proven right, like completely right, what you often get after the upthrust, after distribution, is you get a bounce to what's called the last point of supply. And so it'll be some type of bounce. A lot of times it'll try to consolidate, almost paint a flag sometimes. Again, trying to get more retail involved, thinking it's going to go back up. But if it's distribution, it'll do this. It'll trap retail, and then it will actually start the markdown phase. And if you want an example of this on Bitcoin specifically, we can find it. It's actually something that I had posted about on social media, and I had talked about on social media, and I had warned about on social media, saying, look, this looks like distribution, and it looks like we're about to get a markdown phase. And it was back here, right? It was this little weak pump retest at the bottom side of the 200 in that case, and then down she went, which was actually super textbook. Like if you put trend extensions on the chart And look at this. There's the first leg. There's the pullback. And a measured move was right here at 12,173. Didn't quite get there. Bottomed around 15.5. But it was a very, very clean move. And the reason that this 0.8 is yellow, that's something that I did myself, like when I set mine up, is because a lot of times they don't hit the one target. A lot of times they hit the 0.8. And so if I'm trading something like that, I tend to start taking my profits at the 0.8 level. Or if I'm setting up a reward to risk box, I typically look at the 0.8 level. Now, if we're talking about bull markets, they usually run past the one level, but in bear markets, not so much. So be very careful about, flipping bearish too soon and then getting punished if it pumps up to the last point of supply. But also be mindful that if it does start to move up some, it could be bullish, but it could also be that last pump before the actual markdown phase. Again, this is a chart that I posted up about a year ago, and there's nothing magical about this chart. It was just me predicting October would be the top on Bitcoin, and it's based on previous market cycles. We were roughly 204 bars from the previous all-time high, which was the same as the previous market, just a one-off, right? It totally could be a coincidence. And we're about 152 bars from the bear market low, which was the same as the previous top as well. So those were some hypotheses I had. Again, that way that moved down kind of lines up with that. Let's see if I can find another chart for you guys. This was a chart that I talked about in the last video. I could have swore one of these had wick off on it, and I wanted to show that, but I guess not. Let's see if we can find a wick off chart. Okay, well, this was the old wick off chart, so we can look at it. So this, this was when I was doing videos in 2021 and early 2022, saying, look, I expect it to pump up to the last point of supply. That's what that red squiggly line was. And then I expect it to dump. And I had drawn all this in the chart. I expected it to pump up to around 50,000 and actually only pumped up to about 48, so fairly close, but a few thousand off. And then I expected it to dump after that. And I had drawn this red squiggly line the same way I had drawn on this chart. And if you look, the red squiggly line actually ended right there. I actually nailed the bottom accidentally. And I do mean accidentally. I was just drawing to a general area of around like $10,000, $15,000. I wasn't pinpointing a dollar, but it just so happens that my red line was like almost the exact bottom. But this is what we're seeing now too, is if we did, move down, then it's very possible that we're actually going to move back up toward the last point of supply. And then again, a markdown phase would begin. Okay. So be super, super careful and super cautious about, whichever direction you're leaning. I'm not saying bearish or bullish. I'm just saying be very cautious and really make sure that you're reading the market and looking into volume and trying to find confirmations versus just, guessing. I know that somebody mentioned yesterday that Gravitator was going off, just going bananas on all kinds of charts. I don't doubt that, right? I don't doubt that because the huge sell-offs that happened, like here's a buy alert on Bitcoin, those huge sell-offs were setting massive traps. And this was a trap. Now, whether it goes all the way back up or not, this was a trap because it was testing liquidity after a straight move down. So the most likely thing here was for it to bounce, right? A lot of people were panic selling right into the, the demand. And if we go through altcoin charts, we'll see that all over the place. There's nothing wrong with taking trades, but just remember that Gravitator is not a long-term indicator. It's not like, oh, I buy here and hold forever type of indicator. That's not what the algorithm does. You can do that if you want to do it, but the algorithm itself was just designed to find traps, right? That's what it's designed to do. And more specifically, it's designed to find bear traps, right? Where bears are getting over exuberant and then it's likely to punish them. I don't trade altcoins a lot, so let me just find a random alt. SPX is one. So SPX, I thought, somebody had showed me this a while back, I thought this was like trading the stock market on Kraken. I had never really looked at it that close. That's kind of what it had been explained to me, but it turns out I looked it up. It's not trading the actual SPX. a very misleading name. But this is a perfect example of an alt that crashed yesterday. If you look at it from its high to its low, it crashed 73% in one day, but it also pumped 190-ish% off that low. So there's all kinds of money up for grabs in volatile markets. And the stock market, for those of you that don't trade stocks and don't watch stocks, remember, again, this is further proof that Bitcoin is not a store of value, but a store of value that should have had a decent day yesterday, or a good day even, as people had fears about the markets. But instead, what happened was the QQQ had a terrible day. It sold off about 5%, 3.5% actually. And just that 3.5% move down in the QQQ, Bitcoin overreacted and dumped 20 to 25%. Right? That's what it does, because it is a high beta risk on asset. It either overperforms in bull markets or it underperforms in bear markets. That's typically what it does. I'll wrap the video up there. As always, please remember that I'm some guy sitting in a spare bedroom, and that means that nothing in the video is financial advice. You should always go out and do your own diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Please give the video a thumbs up. Please subscribe to the channel if you're watching on YouTube. And as always, please remember to trade safe.